Well, first of all, you can characterize Bitcoin as a digital currency. You can call it digital gold. You can call it digital cash. You can think of it as digital money. You can think of it as digital property. You can think of it as digital capital. You can think of it as digital energy. You can think of it as a digital asset. And it spawned out of the quote unquote cryptocurrency industry. So a person on inspection, if you've heard about it for a few minutes or an hour, your immediate reaction is cryptocurrency. Crypto is some kind of digital something. And currency, it must be a currency. And people go back and they say, well, it must be a currency because the front page of the white paper said a peer-to-peer, electronic cash system. And so most of all the debates and the criticism in this entire industry are just about semantics and words and interpretation of words. And oftentimes people will just hear one of those words, and based upon their life experience and what they learned in school or what they've learned in business, they will immediately come to a conclusion, which is either an economic opinion or a political opinion or an academic opinion, without first stopping to discuss what the words mean and even if the words are relevant. For example, peer-to-peer. Well, what's a peer? Well, a Bank of Japan is a peer of Bank of England, right? So maybe Satoshi meant it was a peer-to-peer system to move a monetary asset between the central banks or between commercial banks or between Apple and Google and corporations. And if you interpreted the peers as megacorps, mega commercial banks or countries, you would have a different view than, peer, that just means a consumer like me, and I want to send $5 to my friend, and that means Satoshi meant Bitcoin was to send $5 between 8 billion people, peer-to-peer, right? And of course, if you think the latter, you have a totally different opinion of whether it works or doesn't work, versus if you think the former. So what's the definition of peer? Now, what's the definition of cash? Well, a lot of people think cash is the dollars in their pocket or the fiat currency, $5 bills or $20 bills. And so they think peer-to-peer digital cash. Okay, well, I want to send $20 bills from person to person to buy coffee, because that's what I do with $20 bills. And so then it becomes a big debate. Well, obviously, it's not very good for buying coffee. A billion people can't buy coffee with it. It keeps changing in price, so it must not be a success. But of course, that hinges upon you redefining cash or defining cash as fiat currency in small denominations. But of course, when the King of Spain wanted to finance the war in the Netherlands, he sent a fleet of ships with a bunch of gold in their holds to pay for the entire war effort. That was cash. That fleet washed up on the shores of Queen Elizabeth. She stole the gold. It bankrupted the Spanish-Netherlands war effort, and the result is a Protestant Netherlands, but is $1 billion of gold cash. And so when Satoshi said, well, peer-to-peer electronic cash, maybe what Satoshi meant was sending $1 billion of gold between the Bank of England and the Bank of Japan, or the Swiss bank, or Citigroup, or JP Morgan. Okay, well, if you interpreted the words that way, right? Cash is money, money cash. JP Morgan says gold is money, everything else is credit, right? If you interpreted cash as money and not credit, and peer-to-peer as any two counterparties, okay, well then maybe Bitcoin isn't digital currency at all, right? Digital currency, probably the best example of a true digital currency, or close to it right now, would be a tether, a stable coin. And if I could move a stable coin, $87 worth of it at the speed of light on a crypto rail, no KYC, no regulatory controls, with complete privacy, that feels like digital currency, completely private digital currency. Okay, so now if I say to you, well, do you like Bitcoin? And you think, Bitcoin, the digital currency? Well, then you might very well answer like, a certain politician answered a few years ago, like, no, I like the dollar better. Okay, because you thought that Bitcoin was competing with the dollar, and you thought someone was asking you whether we're going to replace the dollar with Bitcoin. So if you think it's digital currency, and you think the euro, the yen, the dollar are currency, then the implication is, well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Now you end up with the entire establishment, every establishment politician, most bankers, most traditional economists pushing back and resisting it. And the politicians will resist it because nobody wants to collapse the dollar. It's a source of American strength. It's probably worth trillions of dollars a year to the US. So obviously we know why we like that if you're an American politician. On the other hand, if you're a classically trained economist, you say, oh, well, the dollar, it needs to be stable and we need to be able to inflate the currency supply and everything's priced in dollars. And so that's a reason for classical economists to dislike it and criticize it. And if you're an accountant, you would say, well, it turns out that every major corporation in the world has accounting systems, SAP, Oracle. They've spent more money in those accounting systems than almost anything else. I mean, a lot of big companies have spent billions and billions of dollars on accounting systems. They're all wired in euros and dollars and yen and CNY. And if you, as CEO, came along and said, hey, we're just going to replace our US dollar-based accounting systems with another system, the board of directors would fire you. The entire finance department would quit. All your shareholders would walk away from the stock. Probably your accountants would withdraw noisily, and your company would collapse. So that doesn't work. So you can see how simply by choosing the word digital currency, I will get a negative pushback reaction. Now, if I roll the word to digital gold, well, a lot of times you go to 1,000 rich families and you say, hey, do you like Bitcoin? It's digital gold. And they say, oh, well, that's interesting. I don't own any gold. Okay, name me one billionaire that ever made $1 billion investing in gold. There isn't any. I can't name a single billionaire that will attest to actually owning $1 billion of gold. I can't name a single family out of 10,000 wealthy families that would ever say, well, we made billions of dollars and we bought $1 billion of gold. Okay, so, well, gold's defective. I could tell you why in 2 hours, but what does it matter? The point is we fixed it with Bitcoin. Everybody can say, okay, well, so I suppose you fixed something I didn't like. It's a crappy commodity, and so good for you, but I don't own any. Okay, so that takes you a different path. Now, let's say we change it to digital property. Okay, well, you want to buy $1 billion of Bitcoin. Oh, it's digital gold. No, I'm not going to. They're going to 6102 me. I heard the government seizes gold when it gets to be too much. You think it's gold and you're afraid that the government will seize it because it backs the currency, because that's your historic mindset. If I say to a wealthy person, you want to buy $1 billion of property? Where? Miami Beach? Yeah, sure. How about New York? Yeah, sure. How about London? I guess so. How about $1 billion of digital property in the greatest city in cyberspace? Seems okay. If you went to Donald Trump and you said, hey, I'm going to invest $1 billion in digital property instead of physical property in LA, he'd probably say, yeah, that's fine. You know, so if you actually call it, and how many people say, oh, I'm a rich person, I bought $1 billion building in Miami Beach, but I'm worried the government's going to 6102 it. No, nobody ever said the government is going to 6102 my $1 billion building, right? I mean, so you have the skeptics saying, oh, it's too good to be true, the government will ban it, but no one ever said the government will ban a building. And so if you think it's property, it just becomes a very straightforward proposition. If you think it's gold, I call it the good, the bad, and the ugly narrative, Guy. The good narrative or model is Bitcoin is digital property. The bad model is Bitcoin is digital gold. The ugly model is Bitcoin is digital currency. And it all comes down to the word, and you won't get past the word before someone comes right back over the top and tells you what they think. And let me, one last point, and you got the next question. My last point is, I can sit in a room of billionaires and I can say, if I said Bitcoin's digital currency, every one of them flinches and says, I know that's not going to fly here, and I can't come out against the real, the peso, the dollar, the euro, the CNY, the whatever. Okay, so all you got to do is say that, and you get immediate no. Or I can say, they go, well, what's Bitcoin? Why should I buy it? I said, I bought it because it's digital property. It's the greatest city in cyberspace, and It's limited to 21 million blocks. And I think one day every rich person will want to live there, and every other person, everybody with money. And you know what they say? They go, oh, no one ever explained it that way. That makes total sense. Yeah, I get it. Yeah, I'll buy some.
With paying homage to Clint Eastwood, Eli Wallach, and Lee Van Cleef, I will ask the next question, and indulge me for a second. And believe me, I'm not suggesting any of what I'm about to say is correct, but it is my belief that Bitcoin was created out of a fear of global central banks run amok. And the timeline sort of suggests that. We go back to sort of 08, 09. When you see, and you were just talking about physical gold, in 2022, global central banks purchased approximately $71 billion worth of gold, which was a record at the time. I think it was 1,131 tons or thereabouts. They did effectively the same thing in 2023 and are on course to do similar this year. When you hear that and or have read about that, you must be saying to yourself, they're just not getting it. They're missing. Maybe there's a place for that in a very infinitesimal way, but you know, my sense is if you had the opportunity to speak to any and all of these central bankers, as you had a number of times, you go into Prague in a couple of weeks, I think, there'd be a much different conversation. Speak to that.
Yeah, I think gold's a waste of time. It's dead money. You know, maybe it's virtue signaling if you're buying it. Gold broke down, you know, as a reserve asset before World War I. And, you know, on the eve of World War I, when all these nations declared war, every single one of them went off the gold standard, you know. And so there's a myth of a gold standard that people like to cling to, but I've read like 3,000 years of economic history. And as far as I can see, it was never as good as anybody ever thought it was. It's always been defective. The real elephant in the room here is two things. Gold doesn't work in time, and gold doesn't work in space. If you look at using gold as a property asset, a reserve asset, a treasury asset in space, there's no way for 1,000 different organizations to custody their gold and swap it every week and settle it. You can't settle every day. You can't settle every week. You can't even custody it, right? So gold centralizes. I mean, how is it possible that, you know, the United States could seize the Russians' gold, right? Like, because, you know, the gold standard, you know, collapsed, or the faux gold standard after Bretton Woods collapsed, I guess, when the French wanted their gold back. But, you know, if you wanted it to be an effective treasury asset in space, you would need to allow peer-to-peer settlement. And that means, how do you have, and when I talk about peers, I'm just going to talk about Apple, Google, JP Morgan, Citigroup, Bank of Japan, Bank of Switzerland. You know, how about the 10,000 biggest economic entities in the world? They all need to be able to custody and swap it every month for it to be stable as a settlement network. And of course, gold isn't that. You can't sell it every day. It doesn't move fast enough. And so that's why it fails versus Bitcoin. With Bitcoin, you could have 10,000 different custodians, and they could be settling $100 million between each one, or $1 billion between each one every day, and the network will hold that kind of load. So gold doesn't work in space, but it also doesn't work in time. Gold has under best of circumstances, a 2% inflation rate. That's steady state. And a 2% inflation rate of gold means a half-life of 30 years, which means that 87 or 88% of your economic wealth is dissipated over 100 years, right? And you know, if you look at Spain in the 16th century, you know, in the 100 years after they discovered America, and you know, they looted the Aztecs and the Incas and everybody else of their gold, they also created 500% inflation. Right, and so they actually hyperinflated their currency in gold coin, collapsed their own empire, and so and the stories are the same about Julius Caesar. When he went off into Gaul and he conquered Gaul, he brought back so much gold, he created hyperinflation in Rome, and that was part of the reason for the civil wars that followed. And you know what they did to Julius Caesar when he came back?
Yeah.
So gold is inflationary. The difference between 2% and 0% is the difference between a half-life of 30 years and a half-life of a billion years,
yeah.
right? And so there you go. Bitcoin is the fix on gold. Gold itself is just a defective treasury asset because it's too slow and it's too inflationary.
Well, I'm glad you mentioned, debt levels and what have you. And again, I am not the student of history that you are. I'm not pretending to be. But what I have read is no developed economy in the history of mankind going back to the Roman Empire has been able to recover from debt to GDP levels of north of 130%. United States, by the way, is right on the precipice of that, number one. And, I'm not calling for the fall of capitalism. But what I will tell you is global debt, as reported earlier this week, is now north of $315 trillion, which sits on top of global GDP of approximately $110 trillion. So when somebody like you sees that, and you talk about this all the time, sort of, the fallacy of currency and just the evaporation of wealth right before your eyes, whether people realize it or not. I mean, those types of numbers, I would think, suggest that that's the environment that Bitcoin is going to do extraordinarily well in. So as central banks continue to run amok and as basically governments do the same, and I want to talk about Japan in a second, but this is the environment that my sense is this Bitcoin was created for 16 or so years ago. Thoughts?
Back to words. Everybody wants to fight over a word, but let's parse the word money. What is money? A classic economist says money is a medium of exchange, a unit of account, a store of value, and then they stop thinking. Well, okay, so what does that mean? Well, it turns out that in Argentina, the medium of exchange is the peso, the unit of account is the dollar, the store of the value is neither. No intelligent person in America thinks that the US dollar is a store of value. If it was, you would find a billionaire that would say that 95% of their assets are in cash accounts in the dollar, and no one is, right? Everybody knows the store of value is something else. Maybe it's the S&P index, maybe it's a building on Park Avenue, maybe it's a sports team. So in 1914, we had a war. The war was financed with debt. If you dig a bit, you find out that the Bank of England bought a lot of the war bonds. And you'll find out that the U.S., the U.S. government bought a lot of the U.S. bonds. So we issued a lot of debt. The governments bought the debt. After the war, they had inflation, right? There's a phrase in New York, right? Pre-war. I think they're referring to World War II, but generally pre-war means before the war, we had good stuff and we built really good, high quality buildings. And then after the war, for whatever reason, we lowered our standards. In Miami Beach, an acre of land before the war was $10,000. Today, it's $10 million. Okay, so will the government collapse? No. Will the currency collapse? Well, it'll just keep sliding.
Right.
So what do you call it if the dollar is worth 0.1% of what it was 100 years ago? It's like, but that's where we are,
yeah.
Right? So the currency will weaken, but intelligent people will adopt a different asset as a store of value. And the best asset for a store of value in the 20th century, if you were wealthy, was property, like a building or land. And maybe if you were middle class, it was a diversified stock portfolio. Clearly the Vanguard 500 or the S&P 500 became the primary capital asset, and it defined the cost of capital for most, corporations and most institutional pursuits. So I think Bitcoin, if you look at it, it's money, but it's the store of value element of money. I think that strong governments will continue to issue currency. They will designate it legal tender. When the country collapses, like El Salvador after the Civil War, or Nigeria, or parts of Africa, when your country or nation state's no longer functional, you won't have a currency. You will adopt somebody else's currency, whether it's the CFA or the euro or the CNY or the USD. But that's okay, And I think that the right way to think about the world going forward is every intelligent person, every reasonable person is going to adopt the local currency as a medium of exchange. They're going to adopt the world reserve currency, as their mid-level, unit of account. That's probably the dollar, unless you're in the Chinese sphere of influence. It might be the CNY. And then they're going to, if they're a conventional investor, a traditional investor, and that's like 99% of the money in the world, they're going to use the S&P index as a store of value, or they're going to have high quality, desirable real estate in the Hamptons or New York or Miami, or they're going to have their home, or they're going to have, probably it's that. Even most wealthy people don't even think bonds are a store of value. They generally think it's, JP Morgan's survey of family offices says 45% of their money's in alternative assets.
Right. Which has been going up every year, I think, pretty consistently over the last decade or so.
Yeah, so traditional investors will use alt assets, equity, or real estate type portfolios, and then occasionally, if they're lucky, they get collectibles, Picassos, or the jets, right? And then the new investors, the 21st century digital investor, will look and they'll add Bitcoin into that mix. And obviously, I happen to believe Bitcoin is by far the best form of property, and it's obviously the best form of digital property. And I happen to believe that the best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. And why is it a little bit better than property? Property evokes $1 billion or $100 million digital warehouse or digital building, but most people don't think that they can decompose and teleport their buildings. But capital, like treasury assets, they need to be liquid. And so if I have $1 billion on my balance sheet and I can liquidate 1% of it a day, and if I can buy $1 million more worth of property or sell $8 million worth of property, as a corporation, I can use Bitcoin as a capital asset. It's very difficult for a corporation to use 4 buildings as a capital asset. I mean, other than, I guess, you would refinance the building and you would adjust your debt load on the building, and you would be using, the dollar, right, as your liquidity there.